We've got Mr. N.S. Venkatesh, who is Treasury Head at IDBI Bank, joining us on the show from the Times of India building. Mr. Venkatesh, to begin with, I think all eyes on the rupee. Where do you see it headed, and do you believe Friday evening's measures taken by the Reserve Bank of India could help?
Good afternoon, Judge. I think the steps taken by RBI on Friday has improved the sentiment to a great extent. But then the flows needs to come in. The flows will take a little bit of time because the FCNR deposit increase in rates will definitely make an attractive investment opportunity for the non-resident Indians. But then that comes in, let us say, over a period of 2 to 3 months. But definitely the flows will start coming in for the FCNR deposit rates. Similarly, the PCFC, the interest rate relaxations will ensure that maybe the exporters could borrow at a cheaper cost and then export. So to that much extent, the export receivables will also come in. But it's a longer process. I personally believe that it will take at least around 3 to 4 months for the entire effect of this particular regulatory change that has happened. But it is definitely a positive sentiment.
Sure, but Mr. Venkatesh, while you say it has worked positively on sentiment, would you attribute the rupee coming off to the fact that the RBI, announced these measures on Friday, or would you attribute it to the fact that you saw strong intervention, indirect intervention by the RBI through public sector banks at the start of trades today? Because we did see the rupee go to the 76 level when, when trading started in the morning.
I do agree. I do agree that as when the markets opened, it went up to around 53.76. There has been some public sector banks which have really sold the dollars. We do not know whether it is due to the central bank intervention. But definitely the central bank, due to its stated objective of managing the volatility, they come out to smoothen the volatility. So we do not know. Quite honestly, I do not know whether it is a central bank intervening, but there has been some public sector banks selling the dollars at this particular level. And maybe whosoever has been long on dollars would have taken comfort to sell it at this level to ensure that they book their gains.
Afternoon, Mr. Venkatesh. You've got the Brent crude prices which have cooled to a 4-month low. How do you believe the bond markets have read into this? Do you believe that you'd be bearish on the yields of the 10-year bond going forward given the dismal macroeconomic data?
Good afternoon, Ayan. I see that Brent falling down and the NYMEX falling down is a positive for the bond market. The cues that the bond market will look forward to is the IAP numbers and the inflation numbers, which are expected to support the market. But the major reason for the bond market not rallying or even yields falling down substantially, I think, is the expectation of the market for looking at maybe in the next auction new 10-year benchmark. If the new 10-year benchmark security is being issued in the next auction, then what will happen is that will get bid at a little bit aggressive level. So the other securities which are near to that could also get adjusted to that yield level. But definitely the Brent falling down, the NYMEX falling down, plus the IAP numbers is a positive sort of thing for the bond market.
Right, and lastly, Mr. Venkatesh, just one more quick word on the rupee. We've spoken to some exporters who say that they are going to continue holding on to dollars because they believe that the rupee could revisit levels that it saw in December last. Now, do you see that happening? And also, should we see something positive come out from Delhi tomorrow on the GAR issue? Can we expect that the rupee will recover and possibly climb above 53?
The 54.30 that we saw in December 15 is definitely a very, very strong resistance level. I personally, when the rupee currently is trading at around 53.36 level, I don't see the possibility of this breaking the 54.30 level. But having said that, definitely all eyes are on there with the ministry or the budget that is getting discussed tomorrow, where basically if there is some clarity on GAR and the foreign institutional investors investment related issues, I personally believe the sentiment will improve and you will see more flows coming back into the country, which will ensure that supply of dollars or supply of foreign currency comes back into the market, which will in turn ensure that the rupee dollar parity is currently at these levels.